Well, good morning, everyone. Good afternoon, good evening. Welcome to Traders Around the World. Welcome to your North American Into the Open session here. I hope folks are doing very, very well. Looking forward to trading markets with you this week. It's a busy week in markets. There's some earnings scattered throughout the week of somewhat importance. Obviously, not as important as the Mag 7 stocks that we saw over the last couple of weeks, but still some very important ones coming out. Lots of data. Bank of Japan changes on how they're treating the yen. That's going to affect the dollar. A big gap down or move down in oil to start off the week. So lots of busyness to start off the week, and the S&P's up. We're sitting up over 0.5% right now with the Nasdaq in tow. But the Nasdaq has got some divergent signaling to the S&P E-mini, so it's a little bit of a tug of war. They're starting to join forces, and we're starting to actually get one of those pre-trade conditioning patterns on the ES on a 5-minute chart. So I'm looking very much forward to it. You got it, George. I should get a Hawaiian shirt for one of the days, and that would be a little colorful. But I don't want it to distract. So let's get going, folks. Everything that I do and say here is for education and insight purposes only. It's not meant as advice. I'm not a registered financial advisor or representative. You must consult yours before making any trading decisions. Trading involves risk, not just reward. Risk of loss. Trade with money you can wholly afford to lose. When I trade, it's always in line with my risk trading plan, which is unique to me and might not be suitable to you. Consult your registered financial advisor and get a risk trading plan. Whether I'm discussing past trades taken, doing live trades in front of you, coming up with plans or projections for future potential trades, whether I'm doing so with respect to a live cash account, a demo account, or a prop trading account, it's all done for education and insight purposes only. It's not meant as advice. And finally, if I poll you in the chat and I give you an average response back to the poll, the sentiment there is not necessarily indicative of the sentiment of our entire group, just those responding. I don't audit the chat, so do take that stuff as anecdotal. All right, looks like we are good to go. So let's get the show on the road here. I'm just making sure all of the right buttons are clicked off so that we are good. Just want to do a double check. Thank you, Tom. You already put it in there. I appreciate it. That's amazing. Thank you. Thank you. All right, folks, let's get going. So I think I want to start off with the S&P E-minis on a daily chart here and just kind of make quick work of the landscape for the market morning. So this is the ESU contract. It's a daily chart of the S&P E-minis, the primary market. If you take a look at the top left-hand side of the screen, we're up about 0.61%, 0.6% higher versus Friday's close. So we had a little jump up and importantly, a jump up to a key area. The 75.55 line, we have surmounted it. We're above it by about 10 handles at this moment in time. And that is opportunistic for upside action. Okay, now let's go take a look at the NASDAQ on the same sort of chart. So here's the NASDAQ, same sort of chart. It's in a different spot. In fact, you know what? Let's put them side by side here so you can kind of get a good view of what I'm talking about. So the S&P E-minis, this big jagged sideways range kind of held the bottom. Obviously, the NASDAQ broke the bottom. It's coming from underneath to test the broken support that was established back in the June 9th, 10th, 11th period, support that was established back over here on the 17th as well, which we broke under precipitously and then had a aggressive bullish reversal last Thursday, some follow through on Friday, and a little bit more follow through today, but not to a higher point. Plus, I've got the NASDAQ encapsulated in this downtrend channel. It is in a downtrend channel. So it's in a much more different spot in terms of its overall movement than the S&P E-minis are. The S&P E-minis are not in a downtrend channel. They broke in that downtrend. That happened last Friday to confirm. That broke, but not for the NQ, right? The NQ has not done that as of yet. So what are we dealing with here? We're dealing with a market on the left-hand side of the screen that has a better than fair chance to continue rising because it's gotten above the 75.55 line. Okay, so it's gotten above the 75.55 line, which is a major concentration of resistance. So the fact that we've had a big down in oil has obviously helped this. Let me just show you what that big down in oil looks like. Where's the CLU contract? There it is. So oil is currently down about 6.5%. It's a gap down. Okay, so that's a significant move. So the geopolitics as a lever for market up or down is supporting the market up. Right, you've got oil down dramatically. Now in currency land, before I get into specific numbers on the ES and the NQ, I want to give you some couching. In currency land, Euro futures are pretty much at a standstill versus where we were on Friday. But what's important is on Thursday and Friday last week, we saw the euro break out of this downtrend channel. So that is actually a risk on factor for the market that supports up for equities in general because it suppresses the dollar. If the yen continues to strengthen and also suppresses the dollar, well, at some point, then traders are going to turn around and start buying precious metals. We're on the cusp of that happening. It's, we saw a few fits and starts of silver rising, gold rising. They both came back down, unfortunately, today, right? So the silver's close was right there on Friday. It opened up higher, right, by about $1. And now has succumbed to the issues of currency intervention from the Bank of Japan, which is causing a little bit of consternation over here. Let's go and take a look at gold. So silver and gold are not swing tradable at this moment, which I've maintained for quite some time now. We have not broken out of a bottoming process. And the reason I bring up silver and gold in this conversation when we're about to trade the ES and the NQ is the tailwind that we're getting from factors in the market, big undercurrents. It's really the geopolitical tailwind. It's not as much the currency tailwind. It's not as much coming from rates or policy, et cetera. It's coming from geopolitics, foreign policy more so than anything else. And it's, of course, helped the ES dramatically rise and get above a key waterline. So gold right now is also down. It did start off stronger. On Friday, we closed right in around there, around 41.05. We opened up at around, 41.35, 41.30, but unfortunately have started to come back down again. Now, I think that both gold and silver are going to be interesting plays as we move through this week, but not a focus this morning. In terms of impact on the equity indices, I've already stated it for you. I think it's the geopolitical lever that is driving risk on for the market, but we still have overvaluation, not fully bought back into the AI semiconductor space overall is the NASDAQ, as Yoda would say. So the way that I would operate here is very conservatively until I know the NASDAQ has been pulled up above key structures of resistance. And we have not seen that happen as of yet. Let me just put them side by side again here for you. What I want you to see over here is, boom, right there. So the ES needs to sustain above 75.55. Worst case scenario, really above the Fibo pivot level, sitting down here at 75.45. While we're above that, I want to think long. But if we're coming down and we're actually breaking, the two little red lines over here, 75.50, where are they exactly? Let's get the exact numbers. 75.53, 75.50. If we come down below 75.50, I want to watch my back. I don't think I want to go into full throttle short mode. Below 75.44, I could start considering shorts, certainly a lot more, to play down to right around here, 75.23 to 75.08, 75.13, somewhere in this territory, right around here. This entire area should act like a springboard, but this pocket of white open space right over here could be an interesting area for a short if the market succumbs to gravity here, and or if the NASDAQ doesn't play ball and starts to get pulled back. So speaking of the NASDAQ, what are the levels on the NASDAQ? And by the way, while we remain above 75.55, we'll use the technical tools and, of course, the indications and the MSR channel, et cetera, to help us trade the ES on the long side. While we're talking about the ES, let's finish off the conversation with the actual multi-time frame dashboard over here. So what are you looking at over here? You're looking at a daily chart of the S&P E-minis with the MSR channel in the backdrop, the speed lines, the triple S indicator with the triangles and the double red dots, double green dots, single blue dots. And in the subchart, you're looking at the triple S indicator itself. On a daily chart, we're trying to get out of a sell signal state. We're above the top of the MSR channel, and the top of the MSR channel resides at around 75.38 and a half a point. So dipping down back into the daily charts channel is bearish. Right? We've already established by going over here and looking at some of the lines that we'd have to come down below, you can actually see 75.38 is the very bottom of that gray zone, and this white zone opens up before the next gray line and red line. So shorting below, let's call it 38 and a half, down to about 20 can make sense. There's an 18-point range over there, and we're at 75.55 right now. Right, we have not actually come down enough yet, but if we come down below 75.50, some will probably want to short it down to 44. I'm not too enthused about that. Below 44, below 38, yeah, I'm much more interested in playing that direction while it lasts. And again, we're in a buy signal state on a 4-hour chart. Okay, and we're holding the speed lines. The slow speed line sitting at 75.49. So this is this chart that I'm focused in on right now. The triple S indicator is in a buy signal state on a chart that casts its signal out into the future by about 3 to 5. Oh, sorry, my apologies. I think that I'm moving. I've moved my camera off. I've been clicking buttons on the side over here. I should just be bringing things up onto the screen here. My apologies. So I'll just do that properly here, so that you've got the right stuff. I forgot. Okay, so now you've got my head on the screen and you've got the right charts. So you've got the daily chart. You can see it in a little bit larger size, I hope now, and it's above the top of the daily charts MSR channel. 4-hour charts in a buy signal state. That buy signal state has not gone away. We're still holding the speed lines, but we're below the fast speed line. We're above the slow speed line. The hourly chart's in a buy signal state. It's a little expensive, but we haven't actually had any bearish crosses over here. So for all intents and purposes, the daily 4-hour, 1-hour charts are in a pretty decent spot. But in the right now, what kind of pattern do we have happening right here, folks? It is obviously right into the cash hours open. So I'm not going to, jump into a trade necessarily right away, but I can tell you we've got the pre-trade conditioning pattern. The PTC pattern is in play. So you've got the up, the down, the up, the down, the up, the down, not separated by more than 6 bars and at least 3 triangles. And now the bar that's presenting after the being left with the down has the double red dots and is below the MSR channel. If it closes like this, well, it's down the hatch. We can probably go. We're coming into a support area, however. So I don't want to rush to short, right? We've already established that 75.44 below there, 75.38 below there. Things can get a little bit more hairy, and we can start looking for shorts shortly after the open. But this is certainly a negative approach into the cash hours open. It is not a market that is broken. The NASDAQ, however, is in a spot that is a little bit more negative. It has a lot of work to do before it can get to a place where it's going to be okay, if you will. So what you're looking at here is a hourly chart, a 5-minute chart, and a 1-minute chart of the NASDAQ E-minis. Now, cash hours have just started, so I'm looking at that positive momentum shift, and I'm going, there might be a breakdown worthy crack there. There might be a bullish reversal here. I'll be trading the micros. I'm going to trade about, 3 to 5 contracts. I'll start off with 3. And again, I'm trading the micros. I'm starting off smaller. I'm already up on the day, trading several accounts individually. I'll share that with you. I think I'm only up about $600 or so, but still profit positive to start the day with a couple of pre-market trades. I'm happy to share that with you in a sec, but I want to see if I can get this short on the NQ. It's the weaker market. It's the market I'd rather short, and it would be below 380. And we're coming down to it. We're perforating it. I've taken on the trade. I do not want to succumb to whipsaw behavior. I definitely want to try to keep this trade for 10 seconds or more. It is gone profit positive right away. Let's see if we can get more out of it. There we go. And thank you very much. An 11-second trade. And how much did it yield? Let's go and figure that out together. Seems like maybe about $70 or so, because I know I was up about $610 earlier. I'll just bring up the P&L. So I'm up about 677.5, and that's the account I just traded right there, an FFF account. So just sharing with you where I'm at with it. Okay, now, is there more continuation to the downside? And before that, did anyone catch that trade? Did anyone catch that trade? So let me know. If you got it, amazing. I know it's early and we just got right into the open, but there's an opportunity, and the opportunity seems to persist, actually. I'm going to lower my basket size down to 1 because I don't want to be caught in a whipsaw. I'm seeing the ES come down into support of the slow speed line on the 4-hour chart. The support on the 1-hour chart is like 20 points lower. So this is like a negotiation moment. If it holds, if the ES holds and starts a turnaround, I don't want to really short the NASDAQ unless it's really overwhelmingly negative. And right now it is. I'm going to take on 1. I feel like this is a bit of a chase entry that I've taken on, but I've done it with 1 micro only. I don't want to get too much red in the account. The trade's been alive for about 9 seconds, 10 seconds now. It's profit positive, and I'm taking my second profit of the day, which was a whopping $2, it seems. Okay, so the reason I'm hesitant on this one is I'm watching the ES, which has been the ballast. It's been the offset. It's been what's picked up the slack for the NASDAQ. And if you look at it right there on that 4-hour chart, it came down through the slow speed line, perforated it, reversed right back up. It's not above the speed lines, which are kind of crisscrossing on the hourly chart. That would be around 58, 59, 75, 58, 59. It is in a pre-trade conditioning sell state, right? The PTC pattern is a very powerful pattern. It appeared in pre-market, okay, a couple of times actually. So it happened once. It cooled off, which can make sense as data came out at 8:30. And then it resumed again. We have these oscillating signals, and we're left with the double red dots above the bar. Now, I don't want to short a green bar, but the tactic that could be used is if it back tests the underbelly of resistance, right? It was support. If it back tests it and gets whacked back down, and it would be only all the way up to 75.60. I still am above that 75.55 line, which makes me not really that interested in shorting the market. So, I pulled away from wanting to short, and it looks like that might have been the righter decision. Let's see where it's left the NASDAQ. Not really much improved, but the ES has certainly turned up, right? Like you can actually see the turn over the last 4 minutes, right? It's decisively trying to stave off further decline for the NQ. So if it turns the NQ, well, there we go, right? Hey, Donna, good morning to you. Okay, so there you go, right? So now it's trying to come up. ES is in a decent enough spot right now that it's trying to slingshot above level. 67 is the next line. 67 and a half a point. So I'm not going to take the trade over here because we are still in the PTC pattern, but we've come back up above the top of the 5-minute MSR channel. We're in a buy signal state tentatively on a 1-minute chart, but again, it's a 1-minute chart. Now I'm going to reduce the number of charts on screen here so that it's less noisy, right? We know where the supports are, and we can of course work with the hourly chart as well. It's the 4-hour chart support at 48.50 that is not on screen that I will remind myself of. So we're sitting at 75.58. We're above that key water line, which is important. And we're trying to convert into a buy signal state on a 1-minute chart. But we've got the sell signal pattern on the 5-minute chart. The double red dots remain. So I don't want to play around with this just yet and be too excited about jumping into a long until I start to see single blue dots, at least on the 5-minute bar. Even intra-bar would be fine. Let's go see how the NASDAQ's behaving at this stage. It did get pulled up by the ES, right? That was the worry that I had in that last short. And that's why I got out of it so quickly, right? It looked like it was going to unravel and take us down into, it took us right to the edge of the abyss and then didn't. I'm actually taking on a long right now on the NQ. It's being pulled up by the ES. The ES has just made some higher highs. So I'm taking on a long there. I wanted to do a little larger size, but I'll do that on the next trade. And the trade's profit positive, and I like profit. So banked a third profitable trade now since the start of the day. And Dave, you're absolutely right. Dave, considering what happens with data, using any technical toolkit is, of course, going to be important because data is like it's event risk. It's the unknown. There's positioning against it for sure, especially if it's big data that comes out. But we don't know exactly how the market will respond. Kind of like when you get an earnings report, right? You get an earnings report, everything looks good from the report, guidance even looks good, and the market sells it off, right? That can happen because the positioning into the event was priced for perfection already, and they didn't over-deliver that the market may have been expecting. Some people call it like a whisper number or whatnot. Okay, so we're still grinding up. We're at 75.66 and a half a point on the ES, and I want to take on another long here. I don't want to take it into like known resistance. Champion trend resistance is right there at 497, and then at 507 we've got more resistance on the hourly chart. So above 507, okay, we've gotten poked above there. Okay, I'll take it above 507. I'll do a couple of contracts this go around. Okay, so I'm in. And the trade is profit positive. Again, it's 5 seconds, 6 seconds old, 7 seconds old, 8 seconds, 9, and 10 seconds old for an $87.50 profit on that trade. So we're getting a little bit of action over here. I'm trying to take advantage of it, and I'm trying to curate it for you and let you know, where I'm willing to enter and why. Those that are still holding on to it, you have your technical right to do so. I've exited as I am seeing potential for this poke out to be very overbought, and we come back down to test support structures that are rising. kind of like the fast speed line right there. So what I'm seeing right now, we've had almost 8 minutes of trade go by, and it's already been a profit positive result so far. That account is now up, so I'm up to almost $200 in that account, up $765 on the day so far. So it's going fairly well. Let's keep adding to the tally if we can here. And in order to do that, I want to find the highest probability next entry and then manage it as needed. Now, in the first 10, 15 minutes, fast action, shorter duration, perhaps smaller size, depending on the acumen of the trader and, of course, the nature of movement as well, makes sense. But so far, in the first 8 minutes of the day, how are you doing? You let me know. How are you doing? Were you able to capture any of this, or are you still digesting the market, kind of getting a rhythm? The rhythm is not set yet. I want to be sure to mention that, but let me know in the chat, how you're doing so far out of the gates. You can do it however you want. You can describe it with flowery words. You can put lucky number 7 in the chat. You can type the letter Y. I'm doing well. Or you can do like Donna did and put a number of how much I made on the day, which is, hey, wow, lots of people are doing that already. So that's amazing. I'm happy to hear that. That's really good, folks. So I'm glad to see that folks are actively engaged and are doing well. And I love that a big lucky number 7 in the chat there. That's awesome. Okay, so it looks good. Now comes the kind of decision moment where things have slowed down out of resistance structure, but the door is open. I'm looking for longs. I want to actually take the long on the ES, to be quite frank. I'm just worried about the NQ poisoning it. But I'm going to bring the ES chart up right now, and I'm going to try a long. It has to be very short-lived. I just want to make sure I've got my position time indicator toggled on, and I don't need anything else really there. So in and around this area still makes sense, right? We're in a tentative buy signal state on the triple S 5-minute chart. We're in a buy signal state on a 1-minute chart and a 1-hour chart. Just got the double green dots going, but I've got this compression in the speed line. So this is either consolidate to continue, which would be the natural way that it should progress. But we've got this very clear problem between the ES and the NQ. The NQ can hold us back, and it is doing that. So I was getting ready for it, but no dice. Not interested in taking it. You heard my words exactly. I'm worried about the NQ poison pilling the move, and it did. There's some news. Let's go and take a quick look, see at what's on the calendar for the morning. Bear with me for a moment. So it is ISM PMIs. That's about it. That's what we're dealing with. It's a big enough number. And we've got some final PMI from the market group that is coming out at 9:45. That's not as consequential as the 10 a.m. data. The ISM, the Institute of Supply Management's Purchasing Manager Index and prices will matter. So we'll look at that when it pops up. So let's continue laboring against the market move right now. What I want to make sure of is, that we're not front running something. We're not, trading something that we think. We want to see it. So I want to see if there's continuation. And clearly I was correct, waiting on the next long opportunity and taking that long off the table fairly quickly on that last trade that I took, which so far my trades have been profitable. I think 4 for 4 or 3 for 3. I don't even know how many I've done in front of you, but I think it's about 3 or 4 trades. And they all have been profit positive. I want to see if I can keep that going. So I want to be very choiceful about this. And 510 seems like a reasonable area, top of the channel on the hourly chart. Let's just go back to the 4-hour chart real quick over here and just make sure that we're not dealing with too much resistance. Yeah, we're free of it. We're free of it above. Actually, no, we're not. My apologies. 460. So 460 and then we don't have to worry about it as much. But obviously we're below 460 right now, so we've taken a turn back down. Is this going to be the break back down? Is this breaking bad now? I don't know. What I do know is that the ES is still holding its own. It's even on a 1 minute chart, it's not below the MSR channel. It is starting to weaken though. The NQ has come down below it, but this is that real moment of test, right? We had the dip, 9:30 a.m. Eastern time bar. We had the rip, right? We established a high. We weren't able to directly overturn that, overcome it and grow. And we've eaten half of the rip up. Okay. So that's still not, that's still not horrible. If we engulf the entire thing, that's a fairly clean message. But we've only gone halfway back. So at this stage, my mind is open for another bounce back up. There's a couple of tactics that could be used here. A bounce effectively above the 1 minute chart channel. It takes us above 460, which was a worry on the 4-hour chart. That could be a way to enter the trade. 465 to play it up to 525 roughly. That would be potentially the next long. I don't like the situation on the Spike 2.0 tool, but I like the Triple S, the Champion Cross, Champion Trend. Champion Cross is not no green dot yet, but Champion Trend is still there. Okay, so I'm going to try this trade with one contract above 65. So I'm in it right now. Okay, it's a more stressed trade. I don't like the fact that the Spike 2.0 tools already dipped down, but we're early enough in the day to have a reversal. And yeah, there's data coming out in about 20, 30 seconds or so. But look, I've already made profit on the trade. And guess what? I'm locking my profit in. Another profitable trade on the little breakout above the top of the 1 minute charts MSR channel. And then plenty of time still to wait before the data comes out at 9:45. The data is not as significant as the data at 10 a.m., but it could be impactful, right? It's I think a finalized number, not a fresh number. Okay, so let's see if we're going to get further here. The next number is 525, and we're already above it. And I'm going to try a trade right here. I feel like the entry's a little stressed, but I'm in. My finger's on the trigger to get out because it doesn't look like it wants to work. This is so far my worst trade of the day, but it's not over yet. It's not over until it's over. And I am going to lock in right there with a loss of about $25 or $30, unfortunately. So 5 of the 5 or 6 trades I've taken, all except one have been winners. The last one was the loser. And I don't want that to deter me or emotionally affect me. I'm simply looking at the next opportunity. It's still above 525 on the NQ, and on the ES, it is above 7570. 7570 would be the number. 7570 would be the number there. And for active trader room students, let's just go and take a quick look-see. I want to just take a quick look-see at my key decision levels on the day here. Yeah, we still have room to grow, but 75 is an important number. 75 is an important number, and it puts us above our launch zone. Still got some work to do to get there. Still got some work to do to get there. Okay, that's still fair though. Okay, I'm in hold mode right now, I'm in wait mode. I'm not interested in taking on a trade just yet now. I need to see a little bit more effectiveness in directionality overall. I just got to come off screen for a second over here to go grab my bottle of water across the room. I'll be back on screen in a second. All right, that's better. Okay, so I'm seeing the ES and the NQ both with some promise to try and lift off. This does look like consolidate to continue. The basics of the pattern that we're dealing with is we had the dump with a reversal to start the first 5-minute bar. We had the rip, And then we had a retrace of about just a little over half the bar, but we spent most of the time, above the halfway marker of the range of the 9:35 a.m. bar. We ripped back up. Okay, now we're getting indecision. So this does look, when you break the 5-minute bars into 1-minute bars, this does look like consolidation, but we're still trapped in this mess of the channel and the speed lines. And we've got a negative momentum shift, which is that red ball and white line right up over here at around 525. So I'm not going to mess around with a long until I see it breach 525. If it breaches 525, there's no guarantee for a win, but that can open the door for a long side entry that I could maybe build and hold for a little while. The one thing that's kind of deterring me is the pattern I'm seeing on the Spike 2.0 tool on the 1-minute chart. It's fine on the 5-minute chart. We've got the slow spike, fast spike, all above the top of the channel, and the signal lines in tow. That means there's more room to grow. The 1-minute chart's kind of lackluster, right? The slow spike's not above the top of the channel. It's actually come down. It's in the upper half of the channel. The fast spike's not above the top yet. Now there it goes. It's trying to pull it back up. So that's good. Fingers on the trigger. I'm going to do a 2 contract long here. I'm looking for 525. Fingers on the trigger. Button is depressed. I haven't unclenched it. And I still haven't unclenched. And now I have. So I got it a little later than I wanted, right? I didn't use a limit order. I tried to catch it manually. So I'm in for a 2 contract MNQ long, and it's not working out. We got pulled back hardly. Now I'm kind of dealing with the fact that I'm in this situation. It's that lackluster position on the Spike 2.0 that was the warning. And unfortunately, it's hurt my P&L, but I am going to responsibly exit. Okay. And that's what happens, right? We got above it. We got whack-a-mole back down. So that's going to make me a little bit more skittish about taking on longs here. The market is obviously seeing supply at the high. Right? I know that there's a high here. That high happened at 9:37 a.m. Eastern time. Okay. I know that we were coming up to it. I also know that we were technically breaking out, or at least temporarily breaking out above the top of a negative momentum shift, which is the red ball and white line, which should open the door for a long. So I'm going to reduce my basket size to 1. And dare I trade that one more time? Or should I just do this on the ES, which might actually be smoother? It's still going to whip around 3-4 points. There's still about 3-4 points of noise embedded on any 1-minute bar right now. So, either way, I'm okay trading either or. But I'm not going to touch the NQ until I've cleared the highs, of course. If we are to directly move above there. The ES is trying to lift off of the speed lines on the 1-minute chart. Let me share that with you. So it looks a little bit more enticing. We are in a buy signal. Double green dots are there. It's not the PTC pattern. No, it's not the PTC pattern. It's not the slingshot pattern. And we've got this wild oscillation of signals on the 5-minute chart. This could be the PTC pattern. We just need to see 2 bars sequentially rising now after the green triangle, or 1 bar with the double green dots and rising. And then that would confirm the high probability long pattern. So it's not confirmed yet. It's in motion. It may confirm, it might not. So I'm considering taking the trade off of the signal set on the 1-minute chart with the backing of the 5 in the hour and doing it effectively above the high, because we are trying to push up off the speed lines. And we still have time before data, the bigger data at 10 a.m. Okay, I'm trying it. I put my entry in. I'm going to bring the chart back to this, but I want to watch the NASDAQ with more intent here because it can poison pill the move. My trade's profit positive, barely, like a 0.5 point or so. But it's this chart that's going to either make it or break it at this stage, right? The ES is trying its best to struggle bust its way up above the highs of the day. It's in profit positive territory. And guess what? I'm taking that $125 because I had one bad trade that, took me out a little bit there, right? So I'm doing some P&L management here. Now, can I re-enter the trade? I can. Okay. I want to see what the NASDAQ's doing. Is the NASDAQ going to actually get back up above the highs of the day and give me a reason, to just play long, rather than sitting here and watching paint dry in this consolidation pattern? The ES is trying to graduate to a higher high. It's the smoother ride, and it's holding the NQ up. At some point, the NQ will grow up, put its long pants on, and break out if the ES continues to keep this up. And we've gotten above a volume profile, a key decision level line on the ES for the ATR students. The 75 line is the important line there. You can see that in your PDF. Let me just see if I got anything here that's good, or we might end up having a little bit of a rest before. No, it's going. So it's trying to take the NASDAQ up. The ES is trying to pull it up. So I've got another negative momentum shift here. And what I'm considering is trying the trade on the NASDAQ driven by the ES pulling it up. The ES is still working. For those who are in it, fast speed line would be the earliest exit line or risk management line. It's at 76.5. We're a point above there, right? If we engage with it, it's not over. If we breach it, that could be a stop loss. Or, of course, the slow speed line at 75.74 could be a stop loss as well. But look at what's happened here, right? We had the sell side of the pattern right into the open. But again, it was the open, right? So I have to take that with a grain of salt. And then we got the three triangles again in a row, and we're now pushing up. So this is something that can pull the NASDAQ, should be able to pull the NASDAQ up and take it above this negative momentum shift, take it above the highs of the session. It should be able to. It not necessarily will, but it's working to that end, and I'm going to try it imminently. Right now, I'm in. The NASDAQ's not working out for me on the instant I hit the button. Well, I'm glad I'm doing it with a micro, but still, that can also cause damage like it's doing right now. The ES still is holding the fast speed line. This entry does not look good, and I've held it longer than I want to. I'm out. Forget it. Not interested. Too choppy, too whippy, not interested. Happier to put on a bigger trade above 28,540. Yeah, happier to put on a bigger trade above 28,540. I think that would make more sense at this stage. Now, data comes in about 5 minutes or so. So, folks who are actively managing right now, you may want to be on the side of cooling your jets modestly until we know what the 10 a.m. data does to the market overall. ISM data has significant influence. It's not as influential necessarily as jobs data, for example, but it is a significant data point, right? It is a significant data point. 28,540 is the number on the NQ. If we pop up above it, I may want to try the trade before the data is released, but I want to get out of the way by the time data comes. There we go. So I'm trying another entry now. This is on a breakout. It looks like it's profit positive. Okay, I like that. Let's see if we can get some profit out of it, and I can actually keep this trade. But if it starts to weaken, I'm going to take my profit. I'm taking my profit. That was a 20-second trade. Maybe I took it prematurely there because we're still pushing up. The ES is now at 83.5. So this could spike the NQ up a little further. I want to do a double check here for those who are still in the trade to make sure that it's still safe to hold. We're coming up to 65, which is the slow speed line on the 4-hour chart. 65 is the next challenge line. We're trying to breach it as we speak right now. So that's why you're facing resistance and a slowdown at this moment. On the daily chart, we've got lots of room. We've got room up to 670. But 565 still is resistance of the fast speed line on the 4-hour chart. And we've stopped right there. We've literally stopped right there within a point or two. So it makes sense. It's logical. It's not just, in the middle of nowhere stopping. It's stopping for a reason. There's falling resistance on a bigger time frame that affected price action. Still able to get a little profitable trade out of it. But I took my trade off the table, and I am now not necessarily considering re-entry. I just want to help those that are in the position. If you're still in the position, we're still riding the speed lines. This should be a bull flag. We've got a strong impulse to buy. We should make a higher high. We should breach 65 here, 565. Okay, so we breached it now. Okay, now where's the next level of resistance? The next level is a negative momentum shift on the hourly chart, and it's at 600. So we've got about 25 points, now 20 points that the market could run before the next area of trouble could be in play. And I do agree with that. The 1 hour triple S is stretched. There's no question about that. But you're also on the ES. You're also dealing with a stretched condition. So very stretched condition over here. Okay, it's also stretched absolute values here on the 5-minute chart, but the location is very opportune. We've just broken into enemy territory. A campaign was launched. Pre-trade conditioning pattern is in. We have one bar closing higher than the last signal bar above the MSR channel. This would be the second bar. It needs to close higher than the last bar. And then the pattern is a go. But then we've got data at 10 a.m. right? So we gotta wait for a little bit for the data to clear. It's about a minute and a half away. So I'm not gonna mess around with a trade until I know what that data says to me. In terms of the next level, 75.83 was a key decision line level, and 94 is the next one on the ES. So we're headed up to 94, very likely. Okay, and I feel like I'm missing out on the move, but hey, I got out of it, and I hopefully helped curate the move and say, hey, one can probably stay in. Next location is 600. We've gotten above 600 on the NQ. Let's go now to the higher time frames. What's the next resistance barrier? On the 4-hour chart, it's 700. On the daily chart, it is the bottom of the MSR channel, which is sitting at 676. Okay, so 675 to 700 would be the next target area we can graduate up to. I doubt it's going to be a direct move there unless the data kicks the market up in the air, and that's a hard game to play. So I'm going to be flat into the data release, and then I'm going to react to whether the data takes us back up above the high. I might be able to join the trade. I know where we're going up to. What if we're going down? I'm not going to flip to short right away. Okay, so the data should be coming out in the next 10 seconds or so, and we're still grinding up. This is unfortunately a situation of averages where you've gone too high before the data, so it's probably going to be a negative, but let's see. Okay, so there was a bit of a dip on the data release, but it hasn't really broken down. But basic law of averages, the higher you go before an event, the more likely the event is not going to keep the highs going. It's just the law of averages. You heard it before the data came out, and then you saw the down, which is, again, it's classic. It doesn't mean the move is fully broken, but it means that it needs to see some offloading. And more buyers then need to come in at areas that make sense, like one of the breakout forecasters. Now, we have not had a bearish speed line cross, and we did get a breakout forecaster on the last 1-minute bar. It's not like the ES is losing support of its speed lines either. It's perforated the slow speed line, but it's holding it. It's very overcooked, right? We can tell that. But this is the chart I'm trading. I'm trading the 5-minute chart. The 1-hour chart's the backbone of the move. The 1-minute chart is simply a triggering mechanism. What's the trade on the 5-minute chart? PTC, pre-trade conditioning pattern. Up, down, up, 2 candles rising sequentially above the top of the channel, beyond the signaled bar. And now we're getting the double green dots, but the bar's not rising. So no trade right now, right? We might have gotten a little overcooked, and we need to pull back to rejuvenate, refuel, refresh, and then re-go up. Let's let the market bring this one to us. So now that we've crossed the hour, let me know how you're doing. Okay, are you keeping yourself under control? Are you have you been able to earn a little bit on the move so far on the day? I'm still profit positive. I'm not at the highs of the day for my profit positivity, but I'm at $682 so far, right? So that's still there. Right, I had one bad trade that erased like $150, as you saw. So I'm still working the plan. Okay, and the double green dots and red bar. Are we talking about that on the ES min? What were we talking about that on? If we were talking about it on the ES, Let me know. And Hearth, that's amazing. Carolyn H, I'm super happy to hear that. That's amazing. I'm seeing lots of great responses in the chat. So kudos to you folks. Well done. Well done. I'm happy to hear it. And Chris D, you know, if you want the NQ to come back to VWAP and then a bounce, sure, that can make sense. And Tim P, if the ISM data presents with the prices, ISM prices came in a little stronger than the consensus estimate, it's going to strengthen the dollar. And that can be a, you know, an immediate little negative to the market. Correct. So correct insight. The top line number came out of 55.6 versus 54 consensus. The ISM prices paid, manufacturing prices, came in at 71.1 versus 70, which you know, stokes the inflation dragon, but it's not a big enough deviation from the consensus to matter. So I still would want to labor towards 75.94 on the ES and labor towards 28,675 to 700 on the NQ. But as Jimmy put it in the chat, maybe it just needs to, you know, the bottle was just uncorked. It needs to breathe. It needs to breathe. Okay, George, well, I'm happy to hear that then. That's good. It needs to breathe is one way for us to kind of characterize it. I'm still liking what I'm seeing on the ES chart on the 5-minute time frame, right? I'm still liking the fact that this is a PTC pattern. Yeah, it's overcooked, as you were saying, Abdi, right? This is overcooked. And if we take it over to a 4-hour chart, let's go take a look at that. You know, 52, still in a buy signal state, still made the move up, it's still positive. And the daily chart's getting itself out of a sell signal state, right? It's in a buy now, tentatively, right? Which is incredible. So we've got a pretty darn good backdrop. Even though it is a little overcooked, it's not burnt. Like, we should be able to see 75.94 and maybe a little bit more on the ES through this move. 75.94 to 76.02, right? Remember that the conversation at the beginning of the session? Getting above that waterline. This is a conversation we've had over and over and over again, right? The entire pattern that we've been dealing with through earnings season. You know, after the big rip up that we got in April and then follow through in May, we went into a sideways range. The range has a bunch of volume profile histograms nested, you know, by event moments, like lows, like highs. And the volume point of control is the area where the most number of contracts exchange hand. And you can see they're all nested between 75.40 all the way up to 75.55 to 60 almost, this entire area. When we opened up in that area, and then we crossed above it, right? So this is a very positive feature of the market to support up overall. You heard that at the beginning of the day. But what you also heard at the beginning of the day is that we've got a problem with the way the NASDAQ is set up in its pattern going back to the beginning of May. You know, it's in a worse spot. What it's doing, well, what has happened is it broke the lows of its pattern, right? It's coming back from underneath to test the underbelly, to test it as resistance. And can the ES just pull things up? Well, yeah, apparently can. And it's still doing a decent job of it right now. So I'm considering an entry long here. I think I'll try it on a move above 89 at this stage to try to play it up to 94 or to 76.02. So I'll just leave that insight, you know, leave that insight in front of you. I will flip back to the NQ chart, but the closer we get to 89, I want to execute at least in front of you here. Doesn't look great. So let's just go see what's going on with the NQ. The NQ is facing some negative momentum shifts, red ball, white line, red ball, white line, but the speed lines have crossed positively back again, which means that we might be resuming a buy sequence, right? We ended a buy sequence when we saw an absence of 2 to 3 bars, no breakout forecasters, none of those dashes. Now they stopped as of the 10 a.m. bar, and then we got a bearish speed line cross. What happens after that? It's predictable. The toolkit helps us with that. We come back and test the last, the second, the third, and on a 1 minute chart, it's very common to see the fourth last tested as well. So we've only tested the last 3, which is fine. Okay, and we've effectively held the MSR channel top, and speed lines are trying to cross bullishly again. The problem that we should have with this actually is still right here. It's in the subchart, the second subchart. The Spike 2.0 tool on a 1 minute time frame makes the best moves as complete moves. If we're getting mid-channel pivots, they're a lot more dangerous to trade. If we're coming and seeing that green line being pulled up from underneath the bottom of the channel, longs are better. If we're seeing it being pulled down from above the top of the channel, shorts are better. But then when we have these moments of mid-channel pivots, it's not good, right? We are seeing it come from above. This could still be, more shortable, if you will, but I'm not going to short a market that is signaled with buy signals, especially with the ES still holding up. It hasn't breached the 89 line yet, so I haven't executed the trade there, but it's getting closer. We're at 88 now. We're getting closer. The ES is trying to get started again, and maybe it will be able to pull the NQ up. So I'll flip the screen to the ES in just a second here. We have to constantly worry about the NQ poison pilling the move. So I've got the NQ open on another screen, but I am interested in the long here, as I've mentioned. I think we're resuming a buy sequence after pulling back, consolidating. It's an overcooked buy sequence, but the cake's not burnt. It's just nearing well done. Don't get me wrong. You wouldn't cook a steak this way, but a cake is different. Okay, 89. Let's see a breach of 89. And I want to be very, very short leashed with the trade if I do take it on. If the market gives me the opportunity to take it on. And I don't know if I'm going to have that case or not, but we'll see. So 75, 87 and change is where we're at. 88, it's trying to bust up. 89 and a tick is where I'm considering entering. So roughly here, right before the highs. But it's slowed down considerably. And that's a bit of an issue, right? Now, maybe it's trying to pass the baton to the NASDAQ, right? If it tries to pass the baton to the NASDAQ, I might have, a better trade on the ES still. But I'm not seeing that baton being passed at this stage. We're still dealing with malaise on that 1 minute chart. And we've got a potential bearish speed line cross afoot on the 5 minute chart. Okay, let's see if it gets a little perk here. Okay, 89 got breached. I'm in. I just hit the buy button. So I just hit it, right? I wanted to catch it as soon as it was getting above 89. I tried my best to bring it on screen right away. Where did I catch it? I caught it at 90 and a tick. So a little higher than I wanted it. Now, I want to be very short leashed with it, right? But we're making an attempt to breach the high of the day. So I'm going to continue to maintain the trade. I definitely want to have the NQ up and, telling me what's happening. If the NQ starts coming down below 580, it could really ruin this trade. So I'm going to have my finger on the trigger. It's at 595 right now, the NQ. But I'm still going to be prudent about this because I don't have a stop planned in. I'm doing this manually. So my finger's on the trigger to protect myself if this thing starts to go awry. And the NQ is almost at, it just came down to the lower 580s and now it's back to the mid to upper. I'm still depressing the flatten button down, but not letting it go. So I'm still in the trade, but I'm like actively looking at escaping from it because the NASDAQ was giving me some worries, but now it's good. And let's see if I can get some profit out of it. There was some profit. All right, I'd rather have profit than none. So I am taking some profit, 37 bucks and 50 pennies. Okay, now the trade is still valid. We're likely coming up to 94. It's going to be a case of a worried rise. The NQ has made it to back above 600. And we know local highs are going to be important to manage. And there's some structures here. So 630 is the final structure of resistance on a 1 minute chart. It's a negative momentum shift. It's a technical indication that comes with wealth charts. It's that red ball and white line right there. So just a smidge below 630. We're trying to get above We've already gotten through stage one, if you will. And then stage two is effectively, it is the high, I think, effectively. The local high here, right? The local high. So let's go see if it makes inroads towards that. And the ES is at 91. It hasn't gotten much further. It got up and tagged 92.5, but it also, unfortunately, is feeling a little exhausted at this stage. So flattening out, if one is not flattened out on their ES trade, where's the risk management line on the ES trade? The speed lines. The fast speed line, the slow speed line. Fast speed line is what we're on right now. Slow speed line is something we're coming down to, 89 and 3 ticks. If we come down below 89 and 3 ticks, I'd rather get out of the way, right? And let it come down to the slow speed line on the 5-minute chart and see if it can bounce up off there and re-enter the trade on the basis of the reversal off of 84, 85, or it has to take out the high, right? It has to take out the high. I want to try a NASDAQ trade next, but I want to only do it if I've got the right behavior on chart. So take out this little negative momentum shift at 616. I could consider a long, but I like the one above 630 better. And where is it going above 630? We've already done the work, right? That's the benefit of having your plan already set up. 675 to 700 is the next location that we could be headed up to. All right, everyone keeping themselves in check, keeping yourself calm, being patient, not trying to overtrade this congestion over here. Well, Kevin M., I'm happy to hear that. That's amazing. Can I read it out? Because that's a real comment from a real trader, and it's a real decision, and I like your decision. You let me know if you're still around. Okay, he said yes. So Kevin M. writes, no losses this morning, and I'm going to do the Kenny Rogers and holding and bail and live my day with this success. Thanks for the good time. So, I like the idea of, know when to hold them, know when to fold them, right? That's the idea over here. And holding on to a gain and saying, hey, look, I've met my quota. I traded it well. The only thing that I can add on to, and Ruth Ann's giving you an applause, Kev. So there you go. But the message is, it's a great decision to know that, I'm done for the day, right? What I would do if you have the energy, and I know it's work, but I would go and deconstruct what you did that was well. Right? If you can pull a gem out of your decision making at the locations that you made the decision, what were the factors? 2-3 bullets behind each trade, right? Because the more you do that, the more you connect language and picture and then decision together, the more repetitive, the more you'll be able to repeat it as a process. I'm not going to say it's going to work every single time. It's a market; it can do whatever it wants. But if you've got great little entry tactics that work over and over, like you see me try to do each day and largely do, I want to be able to repeat them and show you the entries. And I also want to be able to stay out when this kind of, chop is in play, and it is happening. And Harsh, I agree with you, right? I don't see anything yet again until 630 gets breached. Above 630, 28, 630, we go. And I think we're going to get there because the ES did make it up to 94. It just breached 94. The next line on the train north on the ES is 7602. It's up here. Okay. And we just breached a key decision line. So that's good. Okay. We might get indecision next. So we have to be a little patient. If it's going to rocket ship up, it would probably be at the behest of the NASDAQ at this stage. And the NASDAQ is trying to lift things up, which is good. Okay, let's just see if it's successful at it and able to get us through that 28,630 marker, because that becomes a really good spot. And well, I'm glad that that's good, good insight, man. Because 2 or 3 bullets is all you need, right? Of what you did, what you saw, what led you to the execution. And I would do the same thing for losing trades as well, right? Because there could be a case where you're not seeing the blind spot, right? The blind spot is you've done the work and you write your 3 bullets down and they look very different than the 3 bullets on the winning trades, then you know that you're dealing with a blind spot, right? And it's hard to focus exactly on what you're going to write down. But did I break resistance? Did I have time frames aligned? What kind of a structure did I come up above? Okay, this is now trying to get through resistance. Should I front run it, or should I wait for it to breach 630? I'm going to wait for it to breach 630. My finger's on the trigger. I'm going to do a couple of contracts, if not more. ES is at 96. It's progressing well. And the name of the indicator, Dan H, of the red ball and white line is the momentum shift 2.0. So either it acts like a whack-a-mole, or like a breach of a negative divergence, it can offer an entry. So I want to see if we can breach it and sustain above it slightly. My fingers on the trigger, buttons depressed, triple S is in a buy. The Spike 2.0 tool at the very bottom subchart is using high octane bullish fuel. All the lines are above the top of the channel. Okay, so breached with enough of a degree. I took on 2 contracts at the same time. I want to see if we get rapid follow through. We could also have rapid reversal, so be careful here. But we're opening the door, right? The door is not, we've opened the door. We haven't walked through it, and we're falling down. I'm taking my trade off the table. I will re-enter this trade, but it will only be above 635 at this stage. I want to see if I can catch it and ride it. The ES has slowed down. It's still technically in the gravity well of the last line that it broke through, which is a mathematically generated line, 75.94. So I want to see if the NQ can pull it out of its little resting moment, pull the ES out of its resting moment, because we have breached through some structures of some significance here. We are in a decently aligned buy signal state on the triple S indicator, the champion trend indicator, the champion cross indicator, on a 1-minute chart, on a 5-minute chart, on a 1-hour chart. So that alignment is fruitful, for a higher probability of success. But there is a certain point where the market just goes, yeah, I don't have any bullish fuel left. Buyers dry out. And then just organic selling can take you down. But I don't think we're in that moment yet. So fingers on the trigger. I'm looking for the long above 35. I'm in. Looks like I got it around 38, 37. So I'm trying the same sort of trade again. It is a breakout trade. The ES is giving me some trouble. The NQ is actually trying its best to take over the reins of direction and control the move, but I'm not seeing success here. And if we come down below that fast speed line, I'll have to take my L and get out of the way. I'm not interested in leaving my astronaut in a spacewalk when there could be a meteor shower, a micro meteor shower out there, and that would be below the fast and the slow speed line. So far we're in, and it's holding. We've come back up to the high. I'm not letting the trade go yet, but let's see if I can get something actually out of it and it pushes through. ES is coming up above the speed lines, or at least trying to right now on a 1-minute chart. NQ is doing better work on the 1-minute chart than the ES, right? It's trying to take the reins of control, but it's having some trouble. There is some profit here, but it's really minuscule. Better than loss, but I'm still willing to hold it for a little bit. I want to see if that back test works. I don't like the compression of the speed lines because it could just be a dangling and then drop. But I've been in this trade for 1 minute and 20 seconds, way longer than you see my other trades, and I'm giving it a chance to breathe because I've got some good signal alignment. There we go. Let's see if we can get a little more out of this. We're going to 675. Remember, 675 to 700. So I'm going to take my profit here. Okay, I'm going to take that $50 of profit. But we're going to 675, very likely to 700. For those that are still managing the trade, okay, manage it according to your P&L needs. I'm doing what's right for my P&L needs. 650. If it comes back down below 650, might want to watch your back a little bit there. above 675, another 25 points are likely going to be filled to the next resistive area, which is at 28,700. And you can see the difference in the performance now between the ES and the NQ, right? The ES is still more consolidating. It's not escaped above its speed lines as dramatically as the NASDAQ has. The NASDAQ's trying to take controls of the directional reins of the market and run with it. Now, it's coming into an area where we did the work at the beginning of the day to tell us where resistance structures are, right? We know that the ES has got room to get up to 7602, maybe higher. Okay, now that it's breached, and really it's broken 7594. We know that the NQ, and these are daily bars, right? This big picture. We've got resistance of the pink line in the downtrend channel. So that's one standard deviation above the best fit line, representing the action from the 22nd of June, or sorry, the 16th of June onwards. So there is a concentration of mathematical resistance in the 700 area, give or take 20 points around it, a radius of 20 points around it. So 28,700, which also involves, highs on the day, that kind of thing. 28,700 is going to be harder to break through. But if the ES now is going to take controls of the reins again and continue to rise, which it seemingly is, I might want to just take my trade there. Let's just get this off screen, right? It's trying. NASDAQ's trying. It's almost at 70. It's at 60. Now it's at 65. The ES is still got room up to 7602. I feel like I've let it go a little bit here because we did break out of a bull flag technically on that bar right there. And then it kind of paused. And look, the native overcooked condition that we're in should be, first, at the forefront of your mind. It is overcooked, but it is well aligned, right? When we saw the triple S line on that 5-minute chart give us the PTC pattern, which is one of the highest probability technical patterns you can work with out there, right? We had the pattern really started all the way back here. It actually went into a bit of a sell, but then the very next bar reversed, right? And this was right at the open, so we took it with a grain of salt. Then we got an up, then we got a down, then we got an up, at least three bars separated by no more than 6. But technically that holds true to back here at 8:40 a.m. And then we need at least one bar rising above the signal bar with the double green dots, or 2 bars rising sequentially, so that technically the pattern went a go right there at 9:55. Now, let's say you took it at the top of the bar, 75.87. Okay, it's not an incredible move, but 10, 12 point trade. Right. There are stages that, folks could have tried it here, but really the pattern went a go at the close of the 9:55 a.m. 5-minute bar. And it is working. And the very next bar had the double green dots. So I still have got the backdrop very well signaled. But at a certain point, you run out of fuel. And I don't think we're there yet. We're still using high octane bullish fuel on the 5-minute NQ chart. It's the 1-minute chart that's now giving me a little bit of worry. But we're in a buy signal state, classic champion trend pack buy signal state. You had triple S come in early at 9:50 on the NQ 5-minute chart. Champion trend came in, champion cross came in on the 9:55 a.m. bar. Then we had wealth signal come in on the 10:05 a.m. bar. Then we had a couple of breakout forecasters, inclusive of the last closed 5-minute bar. So is the current bar going to get another breakout forecaster? Well, there's no compression in the speed lines. I'd say, yeah, I think we're going. I think we're going to try to hit the 720 marker on the NQ. The worry, though, is the ES, which has done such a magnificent job of picking up the slack for the NQ, that it's so overcooked that it starts to drag us back down again. And we got within 2 points of the next target on the ES so far. We got up to 7,600, like literally on the nose. The 1-minute chart shown an absence on the NQ of no breakout forecaster on the last closed 1-minute bar, none on the current live bar. Perhaps the sequence needs to reset to make the next push up. Now, in an overcooked market, if things are moving slow, pullbacks to refresh, reset, rejuvenate, refuel, and make the next push are commonplace. If the market was moving really fast, we should not be pausing as much as we have, right? We should be seeing, no chop, because the signals are all well aligned. If it was a faster market, we should just be seeing, jump, 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 and go. Because we are so well aligned in our signals across the time frames. But we've got a slower market that's well signaled. So the main gem of the insight there is, it is common to have these little pullbacks in the slower market because folks are not getting the result right away by hitting the button and going. Machines are not getting what they need right away. So they stay in for less and less time. And that can actually be a spiraling effect, right? Where if each time the next level is breached or broken, we only float above it for a little bit and then pull back, and that time duration crunches and crunches. It will force the machines and folks that are manually doing it as well to get out of the way of the position sooner than later. So right here, this is like a bit of a trap. It could end up being the breakout, but I couldn't take the trade until we're above 780. And then I've got maybe 20 points, maybe 40 points of upside on the NQ. Where am I getting that from? Well, 20 points to the 700 local high, and then 40 points if we're coming all the way up to the Fibo weekly pivot level, sitting right here at roughly 28,720. So right now we're at 670. So maybe upwards of 50 points available for a move up. I don't think I'd want to try it until we're above the negative divergence, which is at 680. So I'm capping my potential to 40 points, and it might simply only be 20, but we're nudging up to it. We push through. I'm trying a breakout trade right here. I want to see direct progress. Fingers on the trigger to get out. If it does not sustain above 75, 675, that's as much as I'm willing to risk on this. It's having some struggles, but it's holding. And I'm still holding the trade. But I don't want it to be below 75. I can't sustain it. So I'm just following my rules. So this is what I was talking about, right? We had a little breakout, but we didn't follow through right away. And the more frequently that happens, and the later we get in the morning, the more it's going to have like a multiplicative effect, an exponential effect, a spiraling effect, where people will start closing positions after breakouts sooner and sooner and sooner, to the point where it'll then turn. Still well profit positive on the day, but I'd like to get another trade or two out. Oh, Simon, it's my pleasure. I like to find my aha moments during the day. If I can provide insight to give you an aha moment, I'm happy. I'm happy that that was accomplished. That's good. So David L., why don't you go into the live support room on Wealth Charts and ask them there, because I'm not familiar with that. With the schedule behind the Jumpstart training. For those that are joining me for the Triple S training today, we're going to be doing that private session from 2 to 5 p.m. Eastern time today. It'll be part 2 of the 6-hour training overall that I'm doing. I did part 1 last Thursday, and folks seem to like it very much. And the recording of that is in the Triple S Resource Center. And today is going to be part 2 of it. So I'm looking forward to that for sure. And Mark S., what is that red divergence line? So think about divergences as, you're climbing up the mountain, you get up to a peak, okay? You pull back because you needed to get some food, some fuel, maybe mend a wound or two, and then you're making the next attempt to go to a higher summit. When a divergence presents at a high on the next high, it's telling you that you did not mend enough of the wounds. You did not gather enough fuel. and you're at risk of coming back down again. You don't deserve to be up there, or it's dangerous to be up there because the condition of the climbing crew is not very good, or the equipment is malfunctioning, that kind of thing. So the opposite, it means the opposite though, if we break above there, right? If we break the high of a negative divergence like we're trying to right now, it can actually offer an entry. But think about where the divergence is located. It's located on a very, very expensive area. So the math under the hood on there is Wealth Chart secret sauce. So I'm not gonna I'm not gonna be able to share that. But what I can say is it's one of the, I think it's the best divergence tracker on any technical platform out there. Oh, Jose, I'll put the link for the resource center into the chat. So you'll need two things, right? Now, I'll definitely share with you all of this stuff in the afternoon session. But if you want to get there now, I understand that you've been emailed credentials to log into the becomebettertrader.com site. So make sure that you've got those credentials, because you need to be logged in to the BBT site. So you've got that, perfect. And then the resource center, I'll put the link directly into your chat in just a second here. And hey there, Ed. Glad you just joined. Okay, so here we go. Let me just get it in. Triple S resource center. I'm trying to find it. Triple S. There we go. I got it. Min, that's amazing work. I'm so happy to hear that. Nice 4-digit gain. So, Jose, it's in there for you, okay? Well, thanks, Jimmy. You as well. And the link for today's session, Gerardo, is going to be emailed to you directly at around 1 p.m. Eastern time. So hang tight for that. Jose, it's my pleasure. It's my pleasure. And Ed, welcome to the group. Okay, so I'm not doing any trading right now for good reason. We have, Mark, we did break out above the negative divergences, didn't we? And that technically should give us the opportunity for an entry on the long side. But I'm overlaying the technical indication with, a very, very clear, we're in rarefied air. There's not as much oxygen to breathe up here. There's not as much bullish fuel left. And I'm getting some technical indication of that as well on the Spike 2.0 tool. But look, we can get higher on fumes. And if we do, we're headed up to 700 to 720. And I might want to take on a trade. I'm looking for this now. I'm trying it right now as I'm seeing that Spike 2.0 tool shoot up, Triple S hit the top of the channel. But I have very little patience for it. So I want to see if I can get something done here that's productive. It's a scarier trade, of course, and it's not working out right off the bat here, but it's not over until I come down below the fast speed line, which is at 685. So I'm risking about 6-7 points. It's a 2-contract trade. It's very whippy here, but there you go. And let's see if we can get a pop higher now, up to the 700 marker or more. There we go. Thank you very much. I'll take my profit. There we go. And Ed, sure. Go to the resource center. Go to the resource center for the Triple S tool. Okay. And at the very bottom of the resource center are all the layout codes. And I'm going to be adding some more in as well. Min, that's amazing. I'm glad it's gelling for you. That's great. Proud of you. Happy. Okay. So Ed, you can go directly to the link that I'm going to put into the chat. Right, that will get you to this page. Make sure you log into the BBT site so that you can get to that page, and you should have your BBT credentials already emailed to you. You can grab the layout codes from down there, and I can share this one with you directly right now. Let me just save this. Yeah, I think I can save it just like this. Boom. And let's export it. Where's my export? It should be in here somewhere. As import, I want to export, and I'm not sure where it is. There have been a few changes to the layout on the app, so my apologies. I don't want to fumble the ball too much over here, so I'll try to figure that out off screen. but there should be an export in here. I want to see where it is over here. So I'm missing it somewhere. Okay, so next resistance, we're at it, folks. 720 was the next resistance, right? 720. And if we breach it, we breach it. We're coming right up into 28,719.5, which is the positive 1 standard deviation line above the center of the downtrend channel from the middle of June. It's also coincident with a weekly Fibo pivot level. This should be where we stall. This should be where we stall. Right? This should be where we stall. I'm not going to tell you that I know that it's not going to continue, but this should be an area where we stall. Now, we also have to start considering end-of-hour dynamics here, right? End-of-hour dynamics have to start to be considered at this stage, which it's a net long positioning for the market from cash hours open. It's overcooked, but it's net long. Volume that comes off the tape at, right before 11 a.m. that is also part of that net long positioning in the market has to come off the tape. So there will be some mechanical selling. Now, the selling can start sooner if we don't hold up and try to grind up. I'm not expecting us to blast off here, right? That's the outside bet, but obviously it's still part of the probabilities. If we consolidate for a bit and then grind a little higher, we're still going to be in a spot where they'll hold the positions and milk it until as close to the end of the hour as possible. So just take great care at this stage. Mario, thank you for that. I didn't know that. Okay, so at the you can find the export on each layout, 3 dots top right. Amazing. Oh, you mean like on the dashboard? I'm missing it. I don't want to fumble the ball too much more there. In layouts. Okay, so let's go there. Let's go there. I'm going to go like in here. Ah, I see what you're saying. Additional options. Excellent. Excellent, excellent. So what is this layout that I'm on right now called? And then I'll be able to export it. Okay. I think I know what to do. That's not the one. Let's go over here and just get it done while we're waiting. Go in here, go over there, export, perfect. Copy it, perfect, perfect. I'll put it into the chat. So Ed, if you're looking for the one that's on screen right now, the layout code's going into the chat. 7602 on the ES. NQ is trying to breach that 720 marker again. It's a dangerous area. The ES has got room to continue on the 5-minute chart, triple S. So does the NQ. Room is there. We're in the buy pattern. We're in stage 3 of the sequence. Now, all of this is working out very, very well. So far from the PTC pattern, the pre-trade conditioning pattern on the ES, which went live at the close of this bar, 75.87 was the high or the close of the bar. Let's say it was taken at the close of the bar. So that's 15, that's so far 15 or 16 points in terms of a PTC trade for those who decided to hold it and ride the speed lines, right? Which has been an option the entire ride. We have not closed below the slow speed line once on the 5-minute chart. We threatened it a couple of times, inclusive of the last bar, right? We opened up with the speed lines compressed and opened up at the slow speed line, but it's still holding and it's still grinding up. And the NQ is not making considerably higher highs. Neither is the ES, but we're still grinding up. It is a delicate balance, Laura. I fully agree with you. It is a very delicate balance. And Mohammed Hassan is writing to me saying shorts are incoming. Probably. Okay. I think that it's more so going to be the mechanical unwind of the net long positioning. It's just a matter of when at this stage. So the way that the thinking works over here as you tick towards the end of the hour, or really into the last 10 to 7 minutes of the hour, if the market is continuing to grind up and it's net long in its positioning, in the last 7 to 10 minutes, it will continue to milk that ride higher until the last minute or two. But if we start to see selling into the last 7 to 10 minutes, before the last 7 to 10 minutes of the hour, the selling can beget selling right away by way of the net long positioning coming undone, right? And it's in particular related to the volume that has to come off the tape at 11 a.m. or 10:59 a.m., which would be Eurozone volume. It would also, there's lots of shops out there that limit the traders to that time frame as well. And there's lots of strategies that, get off the tape at that time in North America, not just across the pond. Okay, let's go and do a little roundtable check right now. So I think what would be very useful for folks to hear is long, short, flat. Type in the letter L if you're still in longs, pursuing longs. Type in the letter S if you're short and pursuing shorts. Type in the letter F if you're flat. Overwhelming majority response is flat. Like 90% of the response is flat. The rest is dominated by longs. But let's not use the word dominated. The rest is longs, right? So 90% of the folks that are responding to the question that I just posed are telling me that they're flat, which makes good sense, right? Now, the psychological component of this, right? If you have not made the nut that you need on the day or the target, whatever it is, or you're behind the 8 ball, behind on the day, and if you're hearing me, you're not seeing me trade right now, right? You're hearing majority response of folks in the room come back and say flat. And if a move happens that's of consequence and you're not prepared for it, not willing to take it, okay, you can't kick yourself. You have to make the choice. Is it worthwhile to pursue longs further at this moment in time? My answer to that question is probably it's a no, right? Does that mean I want to flip to short, hit the reverse button in my mind, not on the screen? No, right? We need to break things in order for short to happen. And Sam, yeah, it's actually really easy to do it on the platform. You can effectively go over to where it says here. Let's see if I can do a little lesson on it, or I can point you to the team that will do this really well with you. So see where it says brackets? Yeah, unearth that. There's your TP. There's your stop loss, and you can set the number of ticks. And then once you set them, you can move them around on the screen, okay? And you can also use the trade copier if you're doing it with multiple accounts. And if you want to learn how to do this like step by step, just go to the live support on Wealth Charts and just say, do a demo for me, and they'll do a demo for you right away, right? But otherwise, explore this area here and try it out with like a demo account, and off you go. I hope that at least points you in the right direction, right? And there's literally a live support team that will walk you through it step by step. Right now, I want to really keep my focus on for help for those who are making trading decisions into the end of the hour. And the fact of the matter is we're still signaled long. Fact of the matter is we're overcooked, right? We're into major resistive structures on the daily chart on both accounts. We're slightly above the lip here at 28,720 on the NQ, okay? And we're slightly above the 75, 96, 95-ish line as well on the ES, okay? But we are not in an area where we're starting a move. We're already well into a move, and we've used up a lot of the fuel. So to continue on, it's going to be on fumes, and we're also then making remark to the fact that we're coming close to the end of the hour where there is volume that gets lopped off the tape at 11 a.m. It's not only market closures in the Eurozone, that volume will come off of US futures, but it's also strategies within North America that will that will cease to be in play after 11 a.m. And just basic, the market has had more time going up than it has going down, and it is obviously up on the day, and it's continuing to grow. So the market is more skewed to more longs being held by the volume that will be coming off the tape at 11 a.m. So they have to mechanically close their positions, and if they have to close them, they have to sell them. So we're going to have some downward action on it, which I know, Hassan, you were saying, incoming shorts. Well, that could be when the selling starts, and it usually will. We'll know by about 10:53 a.m. Eastern time whether or not they're going to milk it, and we're going to ride it up until like 10:58, or are we just going to start selling close to like 10:53 and just keep selling into the end of the hour. So right now it's trying to bust up, and I'm thinking of a scalp long, which I now am kicking myself that I did not try it for that little breakout, but that's okay. I can still try it right here, right now. This is a high risk trade. It's based on fumes. It's based on us still running up in this little window that helps me forecast the end of the hour. The window is between 10:47 and 10:53 a.m. And the fact that we made moves up allows me to try. But if I start coming down below the last local high right there, I'm out. Don't want to be in it. I can re-enter the trade at will and try to milk it and run it up, or I can wait to see the behavior until 10:53. And if the majority is rises, great. The reason I was willing to try the trade is I don't think we're going to get much higher. I think we're a little extended at this stage. Now, you can ask the question, where is the next major resistive structure using the technical toolkits on the NQ? So let's go do that. On the daily chart, it's not until we see the top of the champion cross sell zone. That's around 28,890. So that's not really in play at this moment in time. On the 4-hour chart, we busted through all structures. We don't have any structures of resistance above us. And I think it's the same on the 1-hour chart. We don't have any structures. We have a potential negative divergence, but we don't have any other structures here. So, you're in a territory where there's room all the way up to 880. Is that going to be traversed before the end of the hour? I doubt that being the case. I don't think we've got enough bullish fuel left, but could a piece of it be taken? Potentially. And I'm trying this trade again. I want to see if we get slingshot right up through the high, and it's not going my way right away, so I'm not going to press it. I'd rather take a tiny loss and not be part of it. And look, if I want to come back in, it has to break the high. I think we'll break the high. I think we'll see another 20 points above the high, 20 to 25. And I'm going to try it one last time. And if the third time is 3 strikes and I'm out, well, there's a pretty clear message that I'm sending to the room that this is probably now cooked and done, and there's not much left to do. So I'm still in it, but it's not really going anywhere. And we are in rarefied air. We're well aligned with signals, though, right? That's what gives me permission to try. Oh, geez. I think I'm going to take a scratch here on this. Yeah, I'm taking my scratch. It's just too whippy and indecisive. It can continue. It probably does. We probably get up to about 75 to 70 on the move. And for those who are in it, the brave that are in the trade, trail tighter. Okay. We've been rising for the majority of this time window between 10:47 and 10:53. We still have another couple of minutes or a minute and a half or so before 10:53 hits. Now that 6-minute window, it's a unique little testing window. It's an analytical window where if we are net long and we're going to continue grinding up through that window, they will probably keep milking the trade and try to push us up. Could we end up getting to 880? I doubt we'll get all the way up to 880. Could we get up to 800? That's still a nice little chunk of change. And the answer is looking more like yes and yes. Those that are in longs, make sure you trail tighter, but you're in the right spot. ES is above the speed lines on the 1-minute chart as well and trying to rise. So this is healthy for very short-term trades. This is still healthy. We're at what, 76.02, 76.03 on the ES. we made it to the 775, 780 area already on the NQ. And I'm hopeful that those who are trying it have been able to take something out of it, which is amazing. And there's lots of other, resistance lines that we can offer up. From volume profile, I can see it's sticking out over here. Mark, I know you put one in at 883, I think you said, or 873. When I was looking at the Champion Trend Pack Toolkit, it was around 880. So we're in the right neck of the woods in terms of that insight. Direct resistance before that, volume profile would say 810. It's a little node sticking out right there. 810 would probably be the next 810, give or take 2-3 points on either side. So we may still see another 30 points up. And we have been rising through this window. 1053 is here, and the majority of time has been spent rising. So what typically happens in this condition is during that 6-minute window, if the market's not long and we're continuing to rise through that window, we will follow up with rising. I'm not spelling out speed or size, just saying rise. That's about it. And it is going, right? So we're still making higher highs on the NQ. The ES is getting a little concerning, right? It needs to get above its local high, which was made 2 minutes ago or so at 76.03 and a tick, very close to the highs of the day, 76.03 and 3 ticks. And we're doing it on the ES now as well. We're poking up above the local high. We just hit it. So the NASDAQ is still free to run. Those that are managing their longs, keep managing, but watch the speed lines. I don't think I'd be in below the fast speed line. I would want to get out of the way. And there it is. So folks, I'm really hopeful that you had a great morning so far. I know folks are still playing out the final bit of the morning here. I am going to take a little break in just a bit, and we're going to come back and then, answer questions, do some analytics. Any administrivia that needs to happen will happen as well. But it's been a great morning. It seems on both sides of the screen over here. And I look very much forward to, continuing to build on that as we move through the day. So for those of you that, that's amazing, Min. Well done. Well done. Right? Very well done. I'm happy to hear that. I don't think that's crazy at all, Laura. I think that it's actually tight. And meaning, it'll be very protective. I mean, you might get, stopped out more often than not, but I don't think that's crazy at all. You too, Michael K. You too. Hey, Mark S. Well, hey, it's my pleasure. It's my pleasure. So here you go, folks. I'm hopeful that the morning was good. And, that's a big part of the role that I play is I try to identify as many credible entries as possible, keep it objective, keep it interesting, and keep the group as focused as possible on where we can get something out of the market, right? So 810, 812 is the next structure that it can pop up to as we move into the end of the hour. But I think I'm going to take a little breather here. And then we're going to come back shortly after 11 a.m. and continue the conversation. So just a final question for the room. Did you get what you needed out of me this morning? You let me know with the lucky number 7 in the chat. If you did not, and you have questions or things are left open, that's what the last half hour is for. Make sure that you come back and ask me those questions or poke and prod at me and go, hey, I didn't understand this as much, or this didn't make as much sense. Or I need you to add a little more depth in this area or that area, or analyze this for me versus that. And it'll be my pleasure too. All right, folks, I'm going to just put a board up on the screen that will let you know when I'll be back. We'll be back at 11:05 a.m. Eastern time. So let me just get that up on the screen and enjoy your break. We'll see you back here very shortly. And then we'll carry on from around 11:05, continuing the conversation. And making sure that we dot the I's, cross the T's on any questions, anything that's open-ended on your side of the screen that you want to delve deeper into or explore, that's what I'm going to be there for. And if there's some applicable trades as well, I'll try to snag a trade or two in that time as well. See you back here in just about, let's call it about 10 minutes. So we'll be back at around 11:07 a.m. Eastern time. Bye for now, everyone. I'll be back very shortly. Well, hello there, everyone. I am back. Hope things are going well with you, and I hope you enjoyed your break. We've got another 20 minutes or so together here, where I want to focus the effort on making sure questions that you have are answered, and any analytics that you want done in any particular areas. And you're more than welcome to provide that request into the chat, and I'm happy to work towards that. And work on that. So the chat's open. Feel free to put any questions that you have in there, and of course, we'll continue on. Right now, I'll give you a little characterization of the market move. We're not seeing really a forceful selling come in, but we're seeing the long positioning that the market was in, that it maintained right into the end of the hour, just like we forecasted, right up to 10:59. Right, we had one little blip there at 10:54, got right back on the horse, some indecision, pushed up to close and make highs at 11:59, and now we're seeing a little bit of an unwind. Could one take advantage of this with a scalp short? It's risky. I'm tempted to try it. I'm tempted to try it if we come down below a little further into the MSR channel here. I'm going to try a little short ski here. Nothing that should be too serious. And it's instantaneously not working, but I'm still seeing that impulse to sell and the triple S be on the righter side for a little move down. And if it doesn't want to continue and reverses up, that would be normal because we are still in a buy sequence that's trying to unwind. But I would say that the buy sequence is going to have one more push up after this little malaise and this little weakness comes in, come down to about 740. Might be about 20, 25 points lower than where we are right now on the NQ, and then try for a move back up would be the idea. So let's see if this works itself out. Well, it went a little profit positive there. Let's see if it comes down through the center of the MSR channel. And if it's taking too long, I'm just going to bug out and we want to focus in on the chat. Yeah, I'm going to just take some modest profit there and focus in on the chat because I do see several questions that are coming in. So Emmanuel asks, is a trade copier free? Tried using it, but it instantly sold. Okay, so you need to spend a little time with the team to learn how to use it. The trade copier is part of Wealth Charts. It's part of Wealth Charts. So you pick a leader account, and you pick the follower accounts, and it works across different props. It works, of course, within the same prop firm that you're trading. It is absolutely part of the Wealth Charts membership. So what my suggestion would be, I get it. I get it. You can get spooked. What I do is I try it on like an MES or an MNQ, like something really small. But before you even do that, what I would suggest you do is take 10 minutes or so and go over to the top right-hand side of the screen over here where it says live support. When you click that live support, you can bring that onto the screen over here, and you can actually go into the live support session. For some reason, it's not working for me right now. That's okay. But you can open it up in Zoom, and it'll provide you a Zoom room link, right? So there's a Zoom room link that will pop up. You can register for that, and then you can, of course, jump into the support room through Zoom and make short work of learning how to use the trade copier. Folks in there are experts on all the functionality of the platform, so something that's definitely going to be useful, a useful spend of time. Okay. All right. So that's number one. Number two, Cynthia, you ask. Where would ES be broken where shorts are lower risk? Oh, that's a great question. So here's how I'm going to answer that question. Give me a second here to find my key decision level sheet. So 75.08 is the line in the sand for the week. 75.45 is where the launch zone starts. So we've got a long ways to go to get into real hot water. The two-pronged insight. Think of the market as the elastic band. The more stretched it gets, you want to identify the likely location of it maximally stretching, right? So then shorts become valid at that point because it's going to then start to compress and come back down again. So we can do that work on the ES in just a second here. The alternative is you come down below a major level that has like a pocket where there's not a lot of stocks traded, a lot of contracts traded. So here's how I'll do it. I'll bring it up on the daily chart to start. So if you look at the daily chart on the very left-hand side of your screen over here, and if we're going to answer the first part of the question, which is where is it maximally stretched? Okay, so you're looking at the ES continuous contract over here. Maximally stretched is not that far away from where we are right now. I'd have to say the concentration where I can put my horizontal crosshairs and cut through as many of the wicks or bodies of the candles at highs. The maximum number of cuts that I can, or intersections that I can make, happens right in around here, 76.25. And of course, we can add volume profile to this to enhance that insight more. But again, I'm answering the question in two parts. One is if the elastic band is extraordinarily stretched, okay, where's that maximum stretch point where it can start relaxing and coming down more reliably? And then the second part of the question will be what number would we have to come down below to really open the door for a faster drop? So I'm just going to put a volume profile histogram on screen, starting back over here. And over here is really the beginning of May, where we did not have this pattern in full force, but we started to establish, we pushed up. This is the area that we came back down into, roughly similar area here in the lows last week. And what it's doing for me is it's offering up volume profile nodes. So you see how there's one right there at 75.84, which is 20 points below where we are right now. Okay, 75.84. Okay, what do you see happen on the histogram? It starts to become very concave, right? It starts to get very concave. So crossing below that node, it will likely suck price down into the hollowest point before the next node. And the next node actually happens to be the VPOC from May the 6th onwards. VPOC stands for volume point of control. This is where the maximum number of contracts, the most number of contracts changed hands. And that would be at around what, 75, 59 and a half a point. So to answer the question on maximal stretch, I think we've got the right answer. I think it's 76.25. The methodology I used was to identify a line that intersects with the maximum number of wicks bodies of candles at highs, and that happened to be at 76.25. So now if we start to come down from where we are right now, the next node of importance, that sore thumb sticking out on the screen right over here, is at 75.84, where shorts would become a lot more palatable, at least down to this hollow area on the volume profile histogram at around 75.69. So from 84 to, call it 85 to 70, that's an interesting pocket for shorts. And then the next pocket would be from 70, roughly 75, 70, down to the volume point of control, where the expectation would be we do not break it. We probably bounce up off of it. Okay. If broken, of course, that can act like a cliff. And we can fall over pretty rapidly. There are other support nodes, cascading below, but this is a very dangerous line to be broken. And it's sitting 45 points lower than where we are right now. So there's my answer. I hope that made some sense. Okay, let's see what the next question was. So the next question is from Naveed, and the question is, can you please send a copy of today's layout? Sure. So give me a second to get that code, because I think I did have it. Yep, it's in the chat now. So this will be the Champion Trend Pack, Triple S indicator, some of the Wealth Chart member exclusive tools, dark mode, and it's got the NQ in there. Okay, so I'll just put that in. So you can copy and paste that out of the chat. It's there for you. And I'll just get it in here as well. There we go. Okay. So what this is a import code. So after the semicolon or the colon, you can copy without the space. Starting at the number 3, you can copy that that code. And yeah, you can change it from micros to NQ. It's symbol linked, right? So you can see it's pink over here. It's pink over here. And even in the nested charts over here, I think the daily I've got as a continuous contract without symbol linking. But if I want to change this and just go NQ, I can go NQU, or I can go NQ1. Wealth charts will automatically bring the front month up, and you can automatically change it, and it'll change them all, right? It'll change them all. So that's ready to go for you. I don't really see a trade at this moment, so I'm gonna turn my attention back to the chat. And again, make use of the time. Feel free to ask me whatever you like, folks. And I think that there are perhaps some other questions in here that require answers. So let's see. So Adam C, you ask, what does volume coming off the tape exactly mean at 11? So think about markets across the pond that are trading US futures. So the most liquid contracts out in the world that are traded are some of the currency contracts, equity contracts, North American equity indice contracts from a future standpoint. Even in US ETFs are even traded across the pond, but still the futures contracts are traded heavily by lots of trading shops across the world. When their markets close, that volume ceases to exist. So that volume comes off the tape. So in the ES each day, X number of contracts exchange hands, a portion of that ceases to exist after 11 a.m. because those markets are actually closed, and the strategies that I'm speaking specifically of are ones that can only be alive during the market day, meaning they're day trade strategies. They will come off the tape, and as they come off the tape, based on the work that we just did, right? We did that work from and analyzed the market move from the 10:47 to 10:53 a.m. marker. We're predominantly moving up, and the insight very simply is, well, that typically would mean in a market that's already net long in its positioning from the start of cash hours, because we've moved up considerably during that window, if we're grinding up, well, in the last 7 minutes or so of trade, they're going to try to milk that position and expect higher highs. They're not going to start mechanically closing positions until the last minute. And when they close the positions in the last minute, which is what they did, there's 10:59, okay, and then it actually happened right at the end of that bar. The next bar started to sell down, right, 11 a.m. onwards. So the positions that had to come off the tape came off the tape. It didn't drag the market down. They milked it right to the very last minute, and then we started to see some profit taking set in as we don't have have as much buying behavior left. That volume is gone. It's off the tape. So I hope that makes some sense. So that's a great question, Cynthia. What do you like to see before putting on more risk? So I like actually scalping, 5-10 contract size on the NQ. But sometimes the scalps that I do, they last for maybe a second, right? So what I'm trying to do is have trades that are at least on for 10 seconds, which complies with most of the prop rules out there. But my answer is I like playing breakouts. I like this type of a setup where we're about to break out and rocket ship up. I like also having an exhausted market, which is kind of what we're in, dangling at the edge of a cliff, getting ready to fall over, right? And I look for the setup where I've got an exhausted buy signal state. If I want to short, an exhausted buy signal state on a 5-minute chart with my triple S indicator, an exhausted condition in the spike 2.0, which we don't fully have yet. Right, the slow spike is still above its signal line, and both are still above the top of the channel. The fast spike is trying to get back up above the top of the channel. I look for that exhaustion by way of the slow spike, the green line, starting to come down into the channel, which is preceded, of course, by the fast spike pulling it down. I like to see exhaustion in the triple S signal. I might not be crossing quadrant, right, but I want to see exhaustion, like a double top formation or a divergence. which is roughly what we have right now. I don't think that right now, though, we're exhausted to the point where the whole ship turns. I don't think it's the point where the whole ship turns, but I think that we are in a spot where it can make one more higher high that becomes very negatively divergent, and then we roll over. So I like seeing the exhaustion kind of position, and I like to see a dangling at the edge. So for now, let's pretend that my view is that we're not making higher highs. I still think that we can push up for one higher high, okay, in real life. Well, if we pretend that we cannot see any higher highs from here, well, look, right now I'm starting to see the triple S cross below the fast momentum line. It's approaching the center of the channel. If it starts crossing the center of the channel and price is coming into the lower half of the MSR channel, 28,767, I can consider scalping a short. I can consider it. I don't know if I definitively want to take it, but that would be assuming that there was not still enough positive momentum to build on. That would be an interesting location to nibble on a short and then build it below 28,744 with a little bit of larger size, because we've got this exhausted condition, right? I know that if I'm at the top of the elastic band stretch, I like shorts over there. I know that if I'm seeing the elastic band compress after being so stretched and then get to a line that can act like a cliff, at least a significant volume profile node, I can use that to my advantage for larger size and get in. That would be the idea. I hope that that's some form of a decent answer for you. Let me see if I can continue answering questions over here. Here we go. So Naveed, you've got a question. Let me just... Oh, okay. So for today's private triple S session that starts at 2 p.m., you're going to get a email sent directly to you, Naveed, that will allow you access into that session, just like you got last Thursday for that private session. If that's your question, the email will come out at around 1 p.m. Eastern time today. Okay. And if you want to access the pre-recorded, the session that I did last week, you should check your email and make sure that you have your credentials to log into the BBT site, right? The login to the BBT site is the first step. So you'll go to becomebettertrader.com. Let me just get this into your chat. You'll go to the top right of the screen and you'll enter your credentials and log in. And then once you're logged in, you can then use this link that I'm going to put into the chat right now for the Triple S Resource Center. Give me a second. Okay, so I'm putting that directly to you in the chat. Okay, and then you'll be able to get in there. If you don't have your credentials, write into support@becomebettertrader.com or call into the office, whatever you like, and they'll make short work of that. But check your junk, spam, and promotional mail folders because it can get trapped in that area as well. So hopefully that takes care of that. And again, for today's session, you're going to get an email. All right. Okay. Let's see what's happening here. We're starting to wither away here. Could a scalp short come into play? Potentially. I'm trying one right now. Fingers on the trigger to get out if it doesn't want to work for me. I'm 5 seconds, 7 seconds in, 10 seconds in, and okay, there's a $10 trade. Fine. Could there be more? There could be. I'd rather take it below the bottom of the where the champion trend buy zone trail line is. We're probably going to come breach it. It doesn't mean that we can't make another bounce up, but this is definitely a very double topish. We're coming to the neckline. We're about to hit it and breach it. We just did. And where can it take us back down to? Probably 700, 710, somewhere in that area. So for those who are in it, just be very careful because the ES is not giving in, right? The ES is still sitting above 7,600. Again, I don't think the ship is fully turned just as of yet. I think the NASDAQ, which has been weaker, is certainly prone to breaching and breaking. But again, I led you to the idea of a short. I think Cynthia asked that question, right? And you're seeing it materialize, but it's a high risk. It's not a low risk short. It's a high risk short. We would want to see more erosion on the slow spike on that 5-minute chart, i.e. the green line coming into the channel. I'd like to see a clear, we saw the breach of the triple S line through the center of its channel, which was instrumental to the trade. We saw the spike 2.0 go from the very top of the channel, the slow spike, back into the channel, preceded by the fast spike, ripping down. So all of these things supported the idea of a little pocket to short over here. Now, where's the next pocket? Let's just work this to target. Target would be somewhere around 707, potentially to 700. 710 to 700 would be the area that would make the most sense. But it does not have to. Right? What we've got happening right now is the end of a buy sequence on the 5-minute chart. What's the predictable outcome? The predictable outcome after stage 3 of the champion trend pack sequence is over is that we start to come down and test the last, the second, the third last breakout forecaster. Could we be in a move that takes us all the way down to 660? Potentially. Okay, but one step at a time. And also keep in mind the intermarket dynamics right now. Right? Intermarket dynamics show what? The ES is not yet ready to unravel, right? The ES is still holding on. It's holding on to its 1-minute chart MSR channel. It's not in the same spot. It's what's been mopping up the, any messes that the NASDAQ has made from pre-market, pretty much onwards. There was a good chunk of time where the NASDAQ tried to, pull things up. It did, decent job of that. But when you start to see this happening and you're thinking short on the NQ, it's not likely going to work out. It's not likely going to work out. I'm not sure what just happened over there, but there, it's back up. In any case, we're at the end of our time together for this market morning, folks. Did you have a good time this morning? Were you able to learn? Were you able to earn? Let me know. A profit positive morning on my side. Looking forward to building on that as we move through the day. I've got a big day still of broadcasting and streaming in front of me. So I'm going to take your leave now. But I've seen great comments in the chat right now, folks. It looks like folks had a good day by and large. If it didn't work out for you on the day, don't let that emotional negativity build plaque. Go back and figure out what you did that didn't work, right? Write it down. Write 2 or 3 bullets down behind each trade you took this morning and figure out what didn't work. Right, so that you know not to do that again or attempt to avoid it would be the idea. All right, folks, that's it for me. I hope that you had a great morning. It looks like so many of you did, and I'm so happy to hear that. As long as you're learning, earning can come. If you're learning and earning, even better. And kudos to you. Stay safe out there, folks. We'll see you on the flip side. Bye for now, all.